Did you know the U.S. home prices grew by just 3.4% in March of 2025? That's the slowest since 2023. Yet everybody's screaming crash, boom, or kapow. But the truth about 2025's housing market, it will shock you. And that's why I'm uncovering what nobody else tells you. Welcome to 2025's housing market. It's happening. I'm Jerry Pinkas, your real estate expert, showing you what's really happening in real estate. Now, forget the headlines about skyrocketing prices or looming crashes. This year's trends are all driven by three things: interest rates, economic shifts, and demographics. But why aren't they telling you that? Look, if you're a buyer, a seller, or an investor, this is the stuff that you need to know so that you have the edge. So let's break this down. The biggest thing that you're being told, it's the biggest lie. Now, you've heard it all. The housing market's about to collapse, or housing prices are going to double in the next 2 years. And these predictions are scaring the hell out of many first-time home buyers, let alone regular home buyers, and it's really confusing sellers. The problem? Most of these narratives are based on outdated data or pure speculation. And the real problem is real estate is hyper-local. So what's happening in one part of the country may not necessarily be happening in another part. For example, posts on X are claiming prices could jump 10.8% in 2025, while others are posting and predicting a drop. But here's the truth. The market isn't at all what you think. High mortgage rates have been stuck at 6.5% for months, and low inventory is creating a standoff, not a crash, and not a boom. So what's really driving 2025? Again, it's not what you expect. Factor one is mortgage rates. Now, everyone thought that rates would crash to 4% after the Fed cut rates in 2024. Wrong. Rates hovered at 6.7%, and they may not even dip below 6% in 2025. Why? It's because of mixed signals, all at the same time. Inflation is easing, but trade and tariffs are both optimistic and uncertain at the very same time. And the job market remains strong, but wages aren't keeping pace. And even in other parts of the world, war is a concern for some consumers. But here's the twist. Stable interest rates are thawing the market. Recent home sales are actually showing that buyers are adapting. And the moral to this first part of this equation is stop waiting for an interest rate miracle. It's not coming soon. Which leads us to number two, the economic indicators. Now, the economy is stronger than you actually think. Experts are predicting 2 million jobs to be added in 2025. And this fuels demand, especially in millennials and Gen Z, who are reaching the prime home buying age. But here's the catch. Affordability is the real issue, not a crash. A $420,000 home with a 6.9% rate means $2,860 in monthly payments. A short fix to this is that we're going to see builders offering incentives, like rate buydowns. And we've gotten some of our clients a 4.9% or a 3.9% interest rate on new homes to counter this. So the market's not collapsing, it's just really shifting. And now uncover the demographic trend. Number three is those demographic changes. Demographics are completely rewriting the rules. Retirees are moving to warm weather and lower tax states, and at the same time, millennials and Gen Z make up 60% of new home buyers, but many of those have been stuck renting because of these high costs. Now, the interesting wild card here is that baby boomers are downsizing, adding inventory in some markets. But here's the shocker. The South is building homes faster than anywhere else, and they're closing the gap in just 3 years. For example, in Myrtle Beach, South Carolina, it's driven by a strong market demand where buyers are seeking permanent residences in a fast-growing coastal region. But in the Northeast, they're experiencing shortages that could last decades. Now, this means that 2025 is hyper-local, and your zip code matters, your specific neighborhood matters, and what's happening in one side of town may not even be happening on the other side of town. It's hyper-local, and that's what matters more than the national trends. But in 2025, it's a year of balance. Now, here's the truth about 2025. It's not a boom, it's not a bust, it's a shift, and it's balancing out the market. Home prices are expected to grow modestly, around 3 or 4% nationally, but regional differences can really range wildly. Overheated markets like California might cool. Inventory there is up 20.8% from last year, and that's giving buyers a lot more options and a lot more choices. However, if you're selling a home and you're moving, I've got a message for you. Sellers, don't panic. Demand is still strong, and believe it or not, people are still moving. The opportunity, though, is buyers can negotiate better deals. And investors, you should focus on generating positive cash flow rather than relying on appreciation alone. This isn't the market that you're hearing about. It's better. So let's wrap this up because I want to make sure that you're ready for 2025. So here's what you need to know. The last 5 years, we've all seen home prices surge. They raced ahead like they were running for the highest price in the real estate Indy 500. 2025's housing market isn't crashing and it's not soaring, it's just balancing out. Expect that 3 to 4% price growth, stable 6.5 to 7% interest rates, and a hyper-local market that's driven by jobs and by demographics. Don't fall for the crazy headline hype. It's all relative to where you live. You want to stay ahead? Go ahead, drop your comments below and tell me what's going on in your local market. Also, check out my video, The 3 Beach Towns for a Stress-Free Retirement in 2025. Number 1 is going to surprise you, I can assure you that. Go ahead and hit that subscribe button and let's navigate this market together. Take care, guys.